What's going on, everybody? This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market. This is episode 307 of Trade with Travis. Hopefully, everybody's doing very well. Been a while since I've been able to do a live stream. This is Labor Day, so I don't expect that there's going to be a lot of trading going on. But what I am going to end up doing is just talking about, um, well, kind of get my charts situated and straight back out. We're going to end up looking at forex pairs, indices. Going to end up looking at indexes. I'm going to look at cryptocurrency pairs. If there's any pair that y'all would like to be able to take a look at when it comes down to that, and also we'll end up talking about a few other things as we end up getting through. Um, it's been a while. I finally ended up getting back onto my Discord. For some reason, my ended up losing my password and everything else like that. Wasn't able to get back on that. Finally, ended up getting back onto that. Um, so it seemed like I ended up leaving a whole bunch of people out, but it definitely wasn't that case. Hopefully, everybody's doing very well. So what I'm going to end up doing is I'm going to end up going through what's happening with the economic calendar. At the end of going through what's happening with the economic calendar, then after that, I'm going to end up taking a look at what's happening with the overall charts. I'm going to end up fixing up my charts to where we can be able to talk about what's happening this week. Obviously, what's going to end up happening in the future. Trying to get everything prepared for what's going to end up happening in October. Obviously, in October, typically that's when you end up having that push that we end up seeing from October to the end of the year. So I do expect that we're probably going to end up seeing something of that nature to where the market's going to end up moving pretty well when it comes down to that. So let's just keep that in mind as we go through. Disclaimer: I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. I understand that trading involves risk. It involves risk being able to make money. Also involves risk being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, let's see. Let's see. Let's see. Let's, let's see. Let's see. I'm trying to get everything situated here. Let's see. Da, 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 da. Yes. Uh, let's see. All right. Okay. So all right, so taking a look at economic calendar today, obviously banks are or Labor Day in the United States. What we're going to end up seeing is that the Swiss franc ends up having a GDP today. We're going to end up having President Lagarde end up speaking a little bit earlier today, and then after that, um, there is going to end up being something. Oh, interest rate decisions are going to end up happening for the Australian dollar. That's going to end up happening a little bit later on tomorrow. On my charts, obviously, it's showing up as today, so we'll end up taking a look at that as well. Um, and be able to go from there. So the index is probably end up having a little bit of movement, but more than likely we're probably not going to see as much when it comes down to those pairs. But I will pay attention to how those markets are going to end up moving forward and going through after all. Now, from a live streaming perspective, just talking in general, I probably won't be able to do it at 6:30 in the morning just based off of my schedule, but I will end up doing it at we'll end up talking about it the night before and being able to talk about different strategies and ideas of what I think is going to end up happening overall with the market, which should hopefully be able to help out everyone throughout their trading day. Now, as we go through, if you look, my charts are a little bit different. There's three different strategies that I have been working on over the course of the last 6 to 8 months, as I actually haven't been that present. It's not like I haven't been working, it's just that I haven't been necessarily present online. But I am going to end up talking about those. The first one is going to end up being a squeeze, which is going to end up basically going through and kind of tying in with the vortex strategy that we end up talking about overall. And then after that, let's see, go to the single chart. I need to look at scans. Da, 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 da. Let's see, major indexes. Yeah, we're going to end up talking about the vortex strategy, in which I still end up using when the market ends up going into large breakouts. Going to end up talking about uh, They end up talking about another strategy that we end up calling up, which is more of a continuation type of strategy. It used more for mean averaging, more of an automated type of strategy. But we are going to end up talking about that a little bit, and then after that, we're going to end up talking about a mean reversion strategy that we're going to end up using. So each and every pair of trading opportunities will probably end up having one of those things that you'll probably end up noticing. So we're going to end up using all three of those strategies to kind of understand what's actually happening. So we're going to take a look at the United States dollar index from a weekly standpoint first, and after that, then a daily. Then after that, we'll move on to everything else. Kind of go from there. If there's anybody on live that is watching live, thanks for being able to pop in. If you have any questions, please make sure that you place them inside of the chat box, and obviously I'll be able to get to them as we end up going through. So United States dollar index, where are we at? Currently, right now, market from a weekly perspective is showing signs of being in a little bit of consolidation. The market was inside of this channel to the downside. And currently, right now, we see that we're actually breaking over top of it from this standpoint, going towards the upside, which means that we have a breakout. The question is it going to be a full breakout going into this week? Meaning that we're going to end up having a full breakout and then an actual retest, and then after that, hopefully be able to have a pop back up. Or are we going to end up seeing that this market just give us a little bit of a fake out, and then after that, start to push back down to the downside and then keep on moving towards that point? Now, because it is September, typically in September and the start portion of October, we end up not necessarily seeing a lot of explosive movements for its trends. We typically just end up seeing consolidation. So I do expect that we'll probably end up seeing for the next few weeks that the market may end up falling down once again. But currently, right now, as we end up taking a look at it, the weekly is at a point to where when it comes down to the moving averages, it is above the moving averages. It's finding support above the moving averages from a weekly standpoint, but it doesn't necessarily mean that it's truly ready. From a daily standpoint, as we end up taking a look at it, we can see that the market has broken out of this position. It started to be able to retest, and we see that it has broken above. That's a good sign of being able to say that the market is going to end up continuing to have bullish movement over time. The question is going into tomorrow, because I expect that we're going to end up seeing a little bit more of a continuation of what's going to end up being the mood of what the market is going to end up being. We'll probably end up seeing that the market may end up making a decision after the fact on Monday, on Tuesday, especially on Wednesday, as new news ends up coming through. But we have been inside of this channel. All right, there goes your support, there goes your resistance, there goes your resistance, there goes your support. The market has broken out of this resistance. It broke out and it retested this overall position. Are we going to end up seeing a continuation of overall movement? If we take a look at it from a vortex perspective, we can be able to see that we are still basically in the middle of a high volume node. If the market ends up popping out of this area, I would say anything above 104, 104 going into 105, we end up having a small little pocket that we can be able to take advantage of from 105 to 105.60 as the overall move to the upside. Now, just to be able to give it a little bit more context, we're going to go down to the 2 hour and be able to see what's happening, to the 1 hour and see what's happening with the 1 hour. And then after that, we'll kind of break from there. So see that the market has been inside of this consolidation. We go and zoom in a little bit. You take a look at the bars down at the bottom, you end up seeing that there was a squeeze that ended up happening. And let's talk about the squeeze strategy just in general. Um, it's pretty simple. If you have watched me ever before, you know that I love being able to find breakout positions when the market has created some type of consolidation, especially in high volume nodes. Essentially, what ends up happening is that if we take a look at these last 5 bars that end up happening, we end up having a very tight squeeze, or well, very mid squeeze between these red bars, 1, 2, 3, 4, and then after that, you end up having these orange bars. These orange bars end up meaning very a large tight squeeze. Then from there, you can be able to box out where your consolidation actually is, and be able to take a look at where the actual position was. This was the rectangle that we end up taking a look at, or the consolidation that we end up taking a look at. That goes your support. The support was at 103.38. The resistance was at 103.70, 103.78. And then when the market ended up popping up, basically ended up popping back up to this overall resistance, or this overall area where the market, or this mean area where the market ended up having a little bit of consolidation before, as you end up taking a look at what ended up happening inside of this area right here. So large squeeze right there, squeeze right there, meaning strong consolidation. The strong consolidation led to a high volume node, which was right here, led to another high volume node, which was right here. Remember, anytime that the market ends up breaking out, you end up having a retest. There goes your breakout, or there goes your breakout of movement. We end up having this low volume node that we end up pushing up to, and it finally end up pushing back up to this position. Now, as we look at it today, we end up seeing that the market end up having decline in volume, and decline in movement. We got a counter trend line break that is actually happening at this point, and we're starting to see a little bit of a U-turn at this point, kind of moving forward. So the question is, are we going to end up seeing a movement to the upside that is going to continue? That's going to continue to go after this reset, or are we going to end up seeing that the market may end up having a little bit of a fake out a little bit later on today, and then after that, truly making somewhat of a consolidated move after the fact? Don't know that answer yet. Obviously, that's what we're waiting on. But obviously, I'm not looking at being given a trade today. I'm just trying to get an idea about what's happening with the market. So that's the United States dollar index. Let's take a look at what's happening with oil. Let's see. Do I have an oil chart up here? No, I don't. Let's take a look at it. Let's see. Taking a look at oil. Let's see if we get out for this one. When you look at oil on TradingView, typically you could type in US oil, you could type in West Texas Intermediate. I'm going to go West Texas Intermediate. Take a look at those first, and then after that, let's see if there's anything that may end up changing a little bit differently. Oil has had a huge pop up to the upside. I remember oil basically squeezed inside of a large consolidation box the last time I ended up taking a look at this. So we'll kind of go through that and kind of get an idea about what's happening from a weekly perspective. Market was in a huge downtrend, and remember, typically right around October, oil prices end up going a little bit higher just in general, because obviously the weather ends up getting colder. Because of the weather ends up getting colder, typically you end up seeing somewhat of a pop when it comes down to movement. This is a great time to start being able to get a feel for what's happening with oil, so you can start looking at being able to possibly being able to make some profit off of it. But it goes to that down channel that we end up taking a look at, especially when it came down to the United States dollar index. Market end up breaking out of this overall position. Anytime that there's a breakout, typically there will end up being a retest. So we end up having movement from here, support, resistance, support, resistance, support, breakout. After you end up having a breakout, there goes your retest right here. We can finally see that the market is starting to be able to push up to the upside. So the question is, one, should you be able to look at being able to get in? and where is the market going to end up eventually going. Now you can look at that in two different types of ways. From a weekly chart, obviously we'll look at it from a Fibonacci perspective, from a vortex perspective, we end up seeing um, how the market is going to end up reacting. But overall, we do know that the market has been bearish pretty much for the last for the overall portion of the last 2 years. And now we're starting to see a little bit of a retracement when it comes down to movements. It wouldn't surprise me that this market may end up pushing up to at least 93.56. The reason why I say that, that's the last time that the market kind of end up having a little bit of a swing, even though it's not necessarily a clean fractal. We end up having this, a little bit of a pop, and then after that, that movement back up there. So I expect that the market will eventually gravitate towards this area first before being able to turn around and make a U-turn. So 93.50 will probably end up being my target long term when it comes down to this movement. Now let's take a look at it from a daily perspective. From a daily perspective, we can be able to see that obviously we end up having a consolidation. We had the breakout. We finally end up having a retest. So end up having a strong counter trend line break that end up happening right here. From a daily perspective, we're going to end up using these fibs to kind of figure out, we're going to use the fibs to be able to figure out what's happening for the overall movement. And then after that, kind of make a better decision on what's happening. So here to here, we end up having A to B. The market fell down to the 618, had a D extension at 79.98. Market ended up having that U-turn. We're going through the second phase of this field movement. So from here, there goes your new B right there. The market ended up retracing down to the 38.2. The D extension is expected to be at 94.89. So the kind of matches up with that 93.50 area. We kind of do have a little bit of confluence when it comes down to that position. So I do expect that the market may end up pushing up toward that area. You end up taking a look at the negative 236 or the 118 perspective. We do see that that is the top of this overall vortex area. So it may end up having a little bit of struggle being able to push past this point first. I think it'll break. It'll probably end up retesting this portion. And then after that, ultimately end up breaking again at some point in time. But I do expect that the market, once again, is probably going to end up pushing up at least to 88.35 from a short-term perspective. And then after that, probably consolidate for a little bit before being able to break out overall. I'm going to put this as I'm going to have this be transparent because that's the move that I expect that's going to end up happening, or at least kind of take a look at what's going to end up happening. I'm going to drop down to the 1 hour just to kind of confirm my overall ideas and kind of go from there. So here's what we know. We know that the market ended up breaking out of consolidation. We had a retest. The market ended up moving from there. As we go into the 1 hour, let's see. The market is having a little bit of a squeeze right now as we're taking a look at it. Now, obviously, that could be for a couple of reasons. One, because not that many people are trading today. Obviously, you end up taking a look at this. I'm going to make this red so everybody can be able to see it. You take a look at what's happening right there. We have 5 bars of overall consolidation and overall squeeze of movements. Once again, I think that mainly that is because of Sunday to Monday trading, and mainly because there's not that many people trading today. So this counter trend line break, I don't put that much onus on that. The squeeze of this consolidation, I think that we probably might end up seeing that this market may end up staying in consolidation for at least another day or so before truly being able to make a breakout of movements. So resistance is at 85.55. Support currently right now, I will end up seeing it's at 84.90. I want to see if the market is going to end up remaining to be inside of this consolidation going into tomorrow. If it is, my overall expectations would be I would look at being able to possibly look at being able to go bullish at some point in time once the market ends up breaking out of this overall movement to the upside, obviously targeting where I think that the market is going to end up eventually going. We're talking about 88 first, will end up being the first take profit. That possibly could be a take profit for people. And then after that, obviously up to 93 when it comes down to that position of movement from a swing trading perspective. If you're a scalper, obviously you'll look at being able to get a little bit less out of it. But currently, right now, as a overall idea, I would say that my thought process will be, let's see how this market kind of reacts. See if this market's going to end up having a little bit of resistance first, and then after that, if it falls down to here as a support, that could be a potential area to be able to get in at 84.90 for a support buy all the way up to resistance, and then after that, take a portion off, and then after that, let it ride out once that ends up pushing out towards that position. All right, so as we're taking a look at oil, obviously remember that has a huge correlation with what's going on with the Canadian dollar. So if oil prices are going up with the Canadian dollar, then after that we should see that the Canadian dollar should be gaining in strength when it comes down to overall movements as well. Typically October to January is typically great months to start looking at Canadian based pairs because there's typically more volatility that ends up happening in those markets, and typically more trending that ends up happening towards those markets. So something to be able to pay attention to. If that makes sense, type in a Y or a yes. If you have any questions, obviously place it inside of the comments. All right, cool. So that's that. Let's take a look at gold. Let's see. We'll move this and we'll take a look at gold right here. A lot of people, have been eating off of gold this year. It's been a lot of movements when it came down to that. Gold has been in a lot of consolidation since the last time. Was in a lot of consolidation for a while, and for people that love being able to take consolidation trades, then there was feasting off of those movements. As I take a look at it right here, this is what I had long term. So I kind of explained where I'm at right now with it, and kind of get back into this point. So long-term consolidation was at 1670 as a support. The long-term resistance is at 2062 that actually ended up hitting in the early portion of May of this year. Since then, the market has rejected. It is falling. It fell right back towards the overall resistance or this overall consolidation box. It ended up happening at 1904. Since then, the market has been pushing back up to the upside. Remember, as we end up taking a look at this previously, we've seen that the United States dollar index was starting to be able to push bullish, which means that when you take a look at gold, you should see that gold should start to be able to fall a little bit. And that's exactly what's happening. The market is kind of retracing from this overall channel to the downside. It has not truly retest. And I do expect that there may end up being a retest from this position first before ultimately being able to make a push. But from a weekly perspective, this market is still indecisive, but from a trend perspective, the market is still considered to be long-term bullish. Now, from a daily perspective, let's go just based off of moving averages. The 200 moving average, which is in black, is basically saying that the market is bullish. Every other moving average is basically saying that the market is bullish as well. So the short-term movements from a daily perspective would suggest that the market is basically pushing bullish. However, going based off of what we end up talking about with the United States dollar index and the potential movement to the upside of that, I would almost suggest that either you stay away or start looking at potential sales in this overall market. The reason why I'm saying that is because that same channel that I end up seeing on the United States dollar and what's happening with oil is the same channel that I'm looking at on this pair. But it's just going in the opposite direction. We can see that this market has hit resistance, fell down, hit support, went back up, hit resistance, fell down, hit a little bit of support, pushed back up to resistance. And right now, because it is at resistance, if the market does fall back within this channel, I do expect that ultimately it end up falling. The question is, where's the market going to end up falling down to, and is it worth even trading this position at this particular point? Let's take a look at it from a field perspective, and I kind of give a little bit of an answer. But currently, right now, this is not the cleanest of charts to be able to take a look at. Well, it's a clean chart if you're a consolidation player. But for me, taking a look at it from a breakout and a squeeze position, probably not the cleanest chart. Let's see. Fibs from here goes your fractal low. It goes A, B, market pushed back up to C, which was the 23.6, fell all the way down and completed the extension at 1881. Okay, so that movement is over with. The market has retraced since then. And because the market has retraced since then, this is your new fib that you're working off of right here. So there goes your new A, here goes your new B. The market has went up to the 618. Anytime that the market goes up to the 618, it's in a sweet spot area, meaning that most people that love to be able to trade Fibonacci's will start looking at being able to sell in this position. That kind of goes and kind of correlates with what I ended up saying before about that I do not think that gold is basically bullish at this particular point in time. I think that based off of looking at what's happening with the United States dollar index, we probably may end up seeing that the market may end up having a U-turn. That kind of aligns with what we're looking at from this perspective. But if the market does fall, from a long-term perspective, the market could fall all the way down to 1825. Now, is that aligned with any pivots that we end up taking a look at before? The answer to that question is yes. We can see that 1824 ends up having these pivots right here where the market ends up falling to right here, right there, and end up having a little bit of resistance right there. We can see that the market end up having a huge move to the upside based off of a low volume node, huge move to the downside. So there's really there's really not going to end up being that much hesitation if this market does move to the downside and keeps on going. So I may keep my eyes on this one a little bit more, especially US yen based off of taking a look at this. If the US yen is showing signs that it's going to end up pushing bullish and it remains to be bullish with no high volume nodes in sight, then I may end up taking advantage of both of these pairs at the same time. So let's see. Here's my thought process, and I'm going to write this down so I can be able to remember it. Let's see. As long as the market, rejects the channel resistance, that is 1951. I expect that the market should fall rapidly. I'm going to put vortex because that's the reason why I'm saying that, because it's in a low volume node. The question is, where's it going to go? If we're looking at just angles of how the market ended up sharply falling, we could say at least to 1863. So I'm going to say 1860. Let's see, where's this low volume node at? Okay, so I'm going to end up saying 1864. Which is the 118%. Then eventually down to the extension at 1825. Okay, so we already seen that. If we take a look at this and zoom in a little bit more, we can see that there has been rejection already. Market ended up having a strong push up to the upside. We end up seeing that sellers end up taking profit right here. Market tried to push. We've seen that sellers tried to push right there. We've seen that the market ended up pushing up again on a Friday. The market was in a indecision type of area, or indecisive on Friday, and we're starting to see that the market is moving right here. That kind of gives me a little bit more confidence in being able to say that more than likely what you will probably end up seeing is that eventually that the market will continue to keep on falling down to the downside. Ultimately, we're looking at this right now. We can see that the market has been falling. Um, we have this counter trend line break that has been broken to the downside. Um, there's a little bit of support down at 1935 that once the market ends up breaking from that position, if it does break from that position, then we're going inside of this low volume node right here. So if you're looking at possibly being able to get in, and let's say that you're more of a you're more of a consolidation trader, and you want to be able to get in right when the market truly ends up making this breakout, anywhere below 1935 will end up being a good position to be able to get into, being able to going after at least 1922 first, or better yet, let me rephrase that, at least 1925 first, because that's the last time that the market ended up having a little bit of a pivot. So falling down to 1925 will end up being a short-term movement. Then after that, you end up having the other movements that we end up talking about that I end up placing inside of writing. Typing a Y or a yes if that makes sense. Um, my reasoning of being able to say that is simply put because of a couple of reasons. One, we end up taking a look at what happened with the United States dollar index. We see that that market is possibly being able to make a move to the upside. We end up taking a look at what's happening um, with oil, and we can see that oil, I mean, is starting to be able to make a push to the upside, which means that the Canadian dollar is starting to get a little bit stronger. Um, well, that doesn't have a correlation with the United States dollar. We end up having, well, we end up seeing that the United States dollar is having movements to the upside, which means that gold should possibly end up moving to the downside. We see that obviously the market has had this channel that it has not been able to break out yet. We see that we end up having 4 days of overall rejection of this overall movement. So if this market ends up breaking below this overall consolidation level, then do expect that it will fall down to at least 1922 first, at least. Now type in a Y yes if that makes sense. See where the fibs are going to go. There we go. Fibs say 1922 as well. Market pushed up to 1945, which was the 618. The extensions at 1922. That matches up with the correlation of where the vortex is, or the end of the low volume node, which means that we're going to end up having unfair market pricing. I think this is uh, a prime idea of how the market could potentially end up taking a push down to the downside with a whole bunch of correlations happening at the same time. I'm going to take a photo of this. I'm probably going to end up placing this in as a idea. So obviously you'll be able to see it on um, my page if you're not able to see it from before. So I'm going to take a snapshot. Let's see. Download image. And then after that, we'll see it from there. Let's see. ABCD pattern probably going to end up being something like this. A, B, C. The extension should be possibly right there. All right, cool. So did that. Let's take a look at what's happening with US 30 and NAS 100. Then after that, we'll take a look at what's happening with Euro, United States dollar, US yen, and any other pair that y'all may that want to talk about. I'm going to try to see if I can get through this quickly, and then after that, kind of move forward from there. Let's see. Pretty much I had everything on this chart. So we go US 30 right here. Oh, that's an old chart. Oh, is this new? That's happening right now? Oh, that is happening right now. Then where's my information on this one? Don't US 30. There we go. Sorry for everything being too slow. And obviously, I need to clean up these charts a little bit. It's been a while since I've taken a look at them. Um, cool. So I'm going to be very brief with this one. From a daily perspective, yes, I got a lot of information on here I need to get rid of. Here. Yes. Yes. And okay. So from a daily perspective, what has happened? In order to be able to know what ended up happening before we got to talk about what ended up happening previously. Market was inside of this large consolidation. There was a previous consolidation that ended up happening in early 2021 where the resistance was at 35,500. The support was at 33,800 when it came down to the movements. The market ended up pushing all the way up to 36,500. And then after that, I remember the day that Jerome Powell ended up start talking about something that ended up happening news related, and then the market started falling at the beginning of the year in 2022, and obviously with everything else that ended up happening back at that time. So we can see that the market finally ended up breaking out of this consolidation break at 34,500, pushed all the way up to 34,500, which matches up with the overall resistance. So what ended up happening right here? Let's see, horizontal line. I'm going to make this a bright red so everybody can be able to see it. Market ended up pushing up towards that resistance and then after that fell off. Now, obviously, being able to end up knowing what ended up happening in the past made it easier for people to be able to get in for shorts and be able to go from there. So the market ended up pushing up, tried to break out, retested, rejected again, and then fell back down. So currently, right now, I would say that the long-term movement is that the market is showing up as being bearish. I can get rid of this. But when the market ended up falling, it fell down to a vortex area, which was from 35,170 all the way down to the support, which was at 35,570. The market has retested, went back into the middle of this consolidation that ended up happening from June 8th all the way until July 20th, fell down to the support of basically the middle area of that position and then started to push back up from there. Now, as we take a look at this from a daily perspective, we can see that the market is showing signs of being able to basically retest and be able to fall again. The last fib that ended up happening um, ended up going from, I'm going to make a new one because the A was broken. So get rid of that. Because this market is trending, I'm using fibs. If the market wasn't trending, I just showed consolidation. Market fell down, went to the 618, fell all the way down to 34,813. That was the extension. You can see that the market started to be able to make a little U-turn from there. So this was your, go back to ABCDs real quick. That was your A, there goes your B. C ended up going right there. The extension was right here. Okay, so from that, remember C turns into A, D turns into B, and then after that, you just start it all over again. Here goes your A, there goes your B. Market ended up going up to a six. Market ended up going to the 23.6, retraced, and then fell all the way down to 34,288. That is darn near perfect on where it ended up hitting and then bouncing right back up. Um, for people to understand Fibonacci's or people that do not understand Fibonacci's are very powerful in being able to understand what a market is going to end up having its completion point as long as you know how to use them correctly. So there goes your D extension from there. After that, market end up making a new fib. So there goes your A, there goes your B. market end up breaking that overall fib to the upside, which means that this Fibonacci movement was invalidated. But now what happens is that you start to see something called a crown, a bullish crown. Um, what that means is this: market has been falling. When the market ends up breaking a new A, so what ends up happening from there is now when this A ends up getting broken, the market will typically fall down to. Let's try this over again. Let's see. Let's go with that. When the market ends up breaking A, what will end up happening from here is that the market will typically end up retracing all the way back to where that last leg was, or basically where that previous B was, and then after that start having a little bit of a U-turn. So we know that the market fell down right here as a position. It will probably end up falling down, or at least trying to retest that overall position again before ultimately being able to push back up. That's just long-term movements from being able to just understand that from previous years of being able to learn from my mentorship. But I think some people end up calling that a silver bullet. Some people end up calling that, well, obviously we end up calling it a king's crown. But that is the same type of movement or same type of push that ends up happening. Market never completed the D extension. Market went all the way back up, broke the overall A. When the market ends up breaking the A, it invalidates the downside movement. Once it invalidates the downside movement, it will end up having a strong push up to the upside. From that strong push up to the upside, you should be able to see the market end up retracing. Typically, what will end up happening is that the market will end up retracing back to the previous B, or where the market ended up falling, which was right there. That's the reason why you see that the market is starting to bounce a little bit. From there, anywhere around this area or a little bit lower than the overall A. So I'm going to end up saying somewhere here or somewhere around here. The market will end up making another push up to the upside, and I think it will continue to keep on moving gradually towards the upside, ultimately towards back up towards this little middle areas first. I would say right around 35,200 as the overall movement to the upside. I do expect that the market is going to end up making a move to the upside, just based off of that. But if you notice, a little bit of a triangle is actually starting to be created at this point. The triangle is going to end up showing signs of a U-turn that's going to end up eventually happening at some point. If it stays inside of this overall movement, obviously we'll start to see from a squeeze perspective on the 1 hour that we're starting to get more red dots and everything else like that. Currently right now, it's showing that the market is truly bearish on all three charts, but not necessarily having a strong move as of yet. So if I take a look at this a little bit later on today and I end up seeing that the market is doing something to the extent of this, here, and then after that starting to be able to do that, then my thought process would be that I would look at being able to load in on a buy when the market ends up hitting support, with the expectation that 35,200 will end up being a position where the market would go. Okay. Typing a while, yes, if that makes sense. I got time for one more chart. Probably end up looking at some type of movement to the upside from there. Write notes on this. Today is 9/4. Let's see. King's crown is forming on the daily chart. No, not the daily chart, or daily and 1 hour chart. Showing signs of bullish reversal. Expectation is market will push up to 35,200 if that happens. Now, the only thing that I will say about this that may be a little bit different than what I ended up saying before. We've been talking about this from the beginning, saying that the United States dollar index is showing signs of being bullish. If the United States dollar index is showing signs of being bullish, then typically what happens is that the Dow Jones keeps on falling. So one of these things will end up having to validate itself. If the United States dollar is going to end up being bullish, then that means that obviously the index or the Dow Jones is going to continue to keep on falling, which means that it may end up falling down to this second level before being able to push back up. Typically in October, we start to see a lot more pushes to the upside and more trending movement overall. So because we're in early September, it would not faze me if this market falls down one more time, consolidates down here at the support level once again, and then after that starts to push back up. But if the market does make a break to the upside, 35,200 will end up being a position where I think it's going to end up eventually going freely before being able to make a push. Okay, last chart, at least for today, and then after that, we'll try to get into some other ones. Take a look at Euro United States dollar and go from there. Your United States dollar, haven't been taking a look at all that much. I kind of let my expert advisors kind of take advantage of those pairs and just kind of stood on the sideline when it came down to doing a lot of manual trading. But weekly market has been bearish. Obviously, United States dollar has been gaining control or remaining to be in control. Market ended up pushing back up to a previous pivot point of 1.13, rejected down from there, and then after that fell. The market was in a long-term consolidation for a while when the market ended up hitting 105, pushed back up to 110, and then after that typically reject, and then after that rejected. It's in the midpoint of the rejection area. Obviously, the 200 is basically saying that it's bearish. And all of the moving averages are showing signs that if this market continues to keep on falling, that it would be bearish. That kind of goes with what we've been saying with the United States dollar kind of gaining strength. So we'll look at this from a downfield perspective and then see where the market could potentially end up going. And then after that, be able to make a decision on what's happening. From a weekly perspective, there goes your A, there goes your B. Went all the way up to the 786, which means that the extension was at 114, but it fell down to this support. So here goes your new field right here from a weekly perspective, here to here. Found support right there. Then after that went from here to here. Currently the market right now is at the deep 8.6 position. It had already hit that position one time before because it basically did not retrace as much. It did an 80-20 rule based off of that. So if the market does fall down, ultimately I think that 96 will end up being a long-term movement where the market could potentially go. We're talking about this from a short-term perspective. Obviously, it went back inside of consolidations. Anytime that the market ends up breaking back inside of a consolidation, it will typically keep on moving down and at least hit the support zone. So from a short-term perspective, I think that 105.30 will end up being the position where I would look at being able to take advantage of first. But if it does break out of 105.30, then after that, ultimately you got basically parity, and then after that, basically 97, or where the market could potentially go from a long-term perspective. From a daily perspective, market's been falling like a knife. It is below the 200-day moving average, which means that the market is truly bearish. It had a little bit of a U-turn right here for about 3 days. The market has continued to keep on showing that movement. This would be one of those pairs that I would kind of stay away from just because I don't know when the market's going to end up making a U-turn. What's going on, Casey? Yeah, it's been a while. Life has been lifing. That's the best way to be able to say it. I have been working diligently in the background, but I haven't been able to stream as much as I truly like to be. Market pushed up to the 382D extensions at 106.78, which matches up with this low point. So we got two short-term positions. Then after that, we got long-term thought process where the market could go. Let's talk about the short-term areas first, and then after that, we'll go long-term. Short-term, that's why I think that the market will continue to keep on falling down to at least to 106.80. After the market ends up hitting 106.80, the market may end up having a little bit of a retracement. From that retracement, if the market continues to fall bearish, then they'll fall down to the support at 105. I'm going to say 105.40. Only reason why I'm saying 105.40 instead of 105.25 is because from experience, you would love to be able to get out first and take profit. And then after that, if the market keeps on going down, then obviously that's great. But if you end up missing out when people start getting their liquidity taken out, then obviously you'll be mad about it. So I believe that the market will continue to fall down right here. So scalpers, short-term positions, everybody else like that, from an hour perspective, you're looking for a high price to be able to get in, looking for a counter trend line break to be able to get in. I'm not trading today, even though I do see that this market has a strong counter trend line break that's actually starting to happen literally right now as we're speaking about it. But if you do decide to be able to take it, there's two things that you can be able to look at. One, lower your overall risk percentage on how much you're actually risking. Two, make sure that you end up placing your stop loss above this overall high. The high was at 108.03. I will go a few more pips above that, 108.20. Will probably end up being my stop loss. Take profit will end up being obviously at the area where we end up talking about what the support will end up being, let's say 107.15 as a position from there. So that means that your risk versus your reward, let's see, the short position, hypothetically, you taking a trade right now, risk versus reward will end up being a 1 to 2. Not necessarily the worst risk versus reward, but that will be the overall play that I will end up doing. Typing a wire, yes, if that makes sense. That would be an active trade if you're looking at being able to get in right now. Once again, it's Labor Day, so I don't know how much momentum this market is going to continue to keep on having. That's 15 seconds. Wow, I would look at 15 seconds. You see that the market has been dropping, but I don't know how much momentum this market is going to end up eventually having. Hopefully, it may end up giving us a chance a little bit later on tomorrow. Maybe we end up having a little bit of a U-turn or whatever may be the case. Then I look at possibly being able to get in. But other than that, I'm going to let my automation systems kind of trade these and kind of go from there. So if it does something like that, then we'll go. There's a true breakout. There haven't been a retest, so may end up being a retest before the market ultimately falls. But that's the plan. That will be the thought process. Okay, so I'm going to leave this up here. Let's see, 36, risking 36 for 70 on that one. All right, if you like what I ended up doing, please make sure that you end up clicking on the boost. Really would appreciate everybody being able to do that. Thanks for everybody being able to watch. Obviously, it's been a while since I've been able to do that because of work and everything else like that. For all of the people that have been watching, or for all of the people that have been hanging out and doing all other stuff for the longest, like Casey and everybody else. Once again, I truly do apologize for not necessarily streaming as much as I typically would like to. But at the same time, we're back here now, so we end up going from there. Like always, make sure that you end up planning your trade your plan. I see each and every one of y'all in the next video. Once again, we end up doing it at nights instead of doing it live. We'll kind of get ideas about what's going to end up happening with the market until I kind of figure out what my morning schedule is going to end up being. Everybody, take it easy.